What is up, everybody? Welcome back. On today's episode, we're going to go through how we saved one of our clients, Tony, $300,000 inside of his policy, really his retirement strategy, without changing his budget. My name is Dan Trinati. I am the CEO of 360 Financial Group and the Trinati Insurance Agency. If you guys ever do want to connect, please just go to our website, 360financialgroup.com. Go to the contact page. There's a form there for you to fill out. And we're more than happy to run through options for you guys. And if you guys are liking our content, please make sure to subscribe or drop a comment down below. We do put a lot of effort into this and are super excited to actually be back here in the same spot. I know it's probably back-to-back videos here, but there's actually a 2-week break, and I just love this so much that I had to come back to this spot. I love working in the mountains, waking up, having my coffee, and just kind of having my chill mornings and being able to work from here. So it's really exciting. But anyway, we had some exciting stuff happen in the last couple weeks. I was just like giving you guys kind of an overview of what I've been up to. So I took the team out to a little trip, and we had a ton of fun. So once in a while, I always like to do some fun events for the team, and I feel like Great Gatsby here is like an hour and a half outside of Medellin, in an area called simplified, Antioquia. Also San Jeronimo. Did a couple different trips, but we took the team out there. My staff especially was celebrating her birthday. She's been with us for a year, so we took the family out there, did some fun stuff. Saw some beautiful mountains over there, which is absolutely beautiful. Me and a tuk-tuk with the tube went to town and had to find my way back. So that was my ride for a little bit. And I made us some delicious chicharrones, some of my favorite food down here in Colombia. And that's my staff, Anna. That's the most important part. It was her birthday, so happy birthday, Anna, as you are watching this. And we just had a great time celebrating you. So thank you. It was awesome meeting the family and everything. If you guys are an agent or your client and you want to hang out, please don't be afraid to just let me know. More than happy to set something up to do that. Anyway, I want to bring you guys through the strategy that we use, and this is just really important. So this client, Tony, that we're working with, he had a bunch of different IUL policies in term. And I know you guys are probably watching a lot of the annuity content, but we also do specialize on the insurance side of it as well. That's a big portion of it too. And also we do annuities on the side. Anything under the sphere of insurance, that is what we do. So I'm going to bring you guys through what we did for him. So this guy, Tony, we saved him over $300,000 of just evaporating his retirement account, and we didn't have to change his budget to do that. So he thought he was planning for retirement, but he was actually just paying for a bunch of IUL policies and term policies that did not serve his goals. And props for him for getting stuff in place. That is always step number one. A lot of people just don't even action on stuff, and he took action on it. But the issue was when he came to us, he had way too much insurance across too many policies, and they just did not align with his goals. And he knew he was overpaying for a lot of stuff that might not benefit him. So when he came to us, he had 5 different insurance policies. He had 4 different IULs and 1 term policy. So the IUL number 1, he was paying $150. And Tony's also 55 years young. So Tony, if you're watching this, you're not the young skipper in the 20s and 30s. So I know when I'm looking at this, these policies are not funded for maximum cash value. When you're using an IUL, you can have it for death benefit, or you can have it for cash value. You don't want to do both at the same time. And a rule of thumb is you want to be around 10 times your age on a monthly basis. So if he is 55, you want to be putting in at least $550. When we have him spread across so many policies, it's not good for him. And he knew that as well. And that's why he filled out our form to talk to us from one of our Facebook ads. But these were all the different policies that he had. And he's paying over $1,200 per month into this. That's dangerous. Just in all these different policies, they're not max funded. If he doesn't make the payments, if he cannot continue this for the rest of his life, these policies, they go up in smoke, and that is not good for him either. I did not want that to happen. In regards to his goals, the goals were pretty straightforward. He wanted $200,000 of permanent life insurance for his family that's always going to be there no matter when he passes away. And he wanted to maximize his retirement savings and obviously keep the monthly payments as reasonable as possible. At $1,200, he was comfortable with that, so we kept it the same. What Tony actually had between all those policies, he had over $800,000 of death benefit in place and almost no cash value. When we're looking at all these policies, the only one that we're looking at that would have cash value is IUL number 4, $500 a month and $68,000 of death benefit. See, all the other ones have higher death benefit numbers, but he's not even putting in as much. So that means the policies are severely underfunded. And here's what we did for Tony instead. We ended up doing 1 IUL policy. This made it a lot more simple for him to understand what exactly he has. And when he does pass away, it makes it a lot more simple for his wife. Don't have to call around to 5 different places. So we had 1 policy now for maximum death benefit with inside of an IUL, and that's at $550 a month. The second thing we did is we opened up a Roth IRA for him. And at his age, he can contribute up to $8,000 per year into the Roth IRA. And I like keeping them separate. So we did 1 just for death benefit, and we did 1 one for maximum cash value. That's not even inside of a traditional life insurance or a whole life or IUL. We put that inside of a Roth IRA with an annuity. And the reason I really like this for him is because it gives him a lot of flexibility. If he cannot make that $1,200 a month payment or contribution, we do not have to. Life's going to happen. The policies won't go up in smoke. If he cannot contribute to the Roth IRA one month, we just don't contribute. There's no fees in that. And all that money is also going to be tax-free when he goes to take it out. And he's got the death benefit of $200,000 that is still in place. And now with Mr. Tony, he's on track to have over $300,000 inside of his retirement account and have his $200,000. If we were just putting this $1,200 per month into what he currently has, odds are those policies could expire if he misses some payments, if life happens. It's just not good. It's going to give him a lot of stress on the back end, and we do not want that. So, and now these policies align exactly with his goals. So if I just show you guys a basic investment calculator here, and this is just an investment calculator, go to calculator.net. If I just Google investment calculator, and this is not financial advice, and past results did not represent future results. But if we just said in 20 years, he does plan on working until about 75, even just at a 6% growth rate, if we put it at $650 a month, which is what he's doing, he's going to have $300,000 of tax-free retirement money and still have his $200,000 in his life insurance and $300,000 over here, 100% tax-free. And this is exactly what we help our clients do. We figure out what you guys have in place, what the goals are, where do we want to get to. And I know this was fairly simple, but we do specialize in this stuff. So we try to make it as simple as we can for you, the client, to understand what we have and where we got to get to. Anyway, if you guys do have a policy that you guys want to review, or you're just not sure how to set up your retirement this correct way, just drop a comment down here. You can go to our website again too, the 360financialgroup.com/contact. Drop a question down there or fill out the form, and we're more than happy to take a look at what you guys currently have. So I hope this is helpful. This is just another example of this case study that we like to do on the back end of clients that we've helped put in much better positions and save, in Tony's instance, $300,000 for his retirement. And again, if you guys do appreciate this stuff, please go ahead and subscribe, drop a comment down here, and I'll catch you guys next time. Bye.